Hello everyone, welcome back. We have been working on Chapter 5, Cash Control Systems, and we are all the way up to Lesson 4 in Chapter 5, which deals with petty cash. And everything that we focused on in this chapter up till now has been dealing with cash and using checks as a form of payment or a debit card as a form of payment and not actual true cash Benjamins. And so what you want to know is that in some cases, businesses actually use small amounts of cash that they keep on hand because it's just an easier way to deal with transactions. I'll tell you, when I worked at the office that I worked at right after college, an orthopedic clinic, we had a small petty cash fund so that if we wanted to order like pizza in on a Friday, or if we wanted to do send somebody out to buy on a quick supply run, we sent them with cash because it was just an easier way to process things than trying to issue a check and getting a doctor to sign for it. So we used a petty cash fund for that. And sometimes it's just the better way to deal with it. Now, typically, petty cash is a small dollar amount, so you're not talking about having $1,000 in cash sitting around. You're typically talking about having $100 sitting around, which, as we talk about petty cash, that might really help us to kind of establish what we're doing here. So learning objectives for this lesson would be, how do we establish petty cash, a petty cash fund? How do we prepare a report to look at what's going on in our petty cash account? And then how do we replenish a petty cash fund if we start using the cash? So first of all, this whole idea about petty cash is really just a small amount of cash that businesses keep on hand and use to make small payments where it's just easier to use petty cash and actual cash rather than trying to write checks. And so when you're looking at petty cash, the normal balance side for petty cash is going to be on the debit side. So debit increases, credit decreases, and you then would be placing this on the asset side of the accounting equation. So if we go ahead and look at establishing or setting up a petty cash fund, what you can see here is that we would be debiting petty cash and crediting our cash account in our business to go ahead and establish that petty cash, because the cash has to come from somewhere and it's coming from our cash account. So if we look at the general journal transaction for that, we're writing the date in. You can see that petty cash and that it's check number 8 that we're using to do it. So it's a $100 debit to petty cash, a $100 credit to cash. Once you have a petty cash fund, you need to establish some kind of controls and have something in place so that you have good records for this money that you've got just sitting in a drawer somewhere. And so a great way to do that is what's called a petty cash slip. And you can see on that slip, it really tells you who you paid the money to, what you paid it for, and what account that this is going to be posted to when you actually start posting your transactions. You can see this petty cash slip says for a newspaper ad, it's advertising expense, we paid $14. And a really important piece in order to keep track is that you would have somebody approve or sign off on this transaction. That basically means Michael Delgado checked and only took $14 out of the petty cash drawer. Okay. More than likely in a business, there are only 2 or 3 people that would be responsible for making sure that they know what's going on in that petty cash situation. And only those 2 or 3 people would have access to the petty cash. Only those 2 or 3 people would be signing off on the petty cash slip. So after you have had some activity or transactions going on in your petty cash account, you need to create a report to go ahead and report or record all the activity that has gone on in the petty cash account. And what you want to do then is remember that once you put together that report, there's a chance that you may have more or less money than you think that you should have based on the activity that has happened if you go ahead and compare all of your petty cash slips. So if you have less than what you think, you're cash short. If you have more than what you think, you're cash over. And if you have exactly what you're supposed to have, then you have awesome record keepers in your business. What I'll tell you is you're more likely to have cash short than you are to have cash over. And whoever is responsible for your petty cash account then is going to go ahead and prepare a report anytime they request more money go into that petty cash account. So on the report, what you would be looking at is essentially something that shows all of the activity that happened in the account. So you can see we started out with $100. We paid 2 expenses out of there. One was a miscellaneous, one was for advertising. So we have receipt, those petty cash slips, for $34. And the amount that we think we should have is $66. But when we count the actual money we have, we only have $65, which means we're $1 short. We have to do record keeping within our books to report not only the miscellaneous expense and the advertising expense, but that dollar that we're now cash short. We have to go ahead and report that. So on our petty cash report, you can see the date, the person that's managing it, how much was in the account, what happened for the month, and then the general ledger accounts that we're going to be touching based on those transactions, and then the total amount we paid out. So once we figure out what we say we should have on hand and what we actually have, you can see we're $1 short. Now, the last piece of there says we need $35 to get our petty cash back to the $100 that we think we need to have on hand for our petty cash account. So the account title that we'll be looking at is cash short or cash over. And when cash is short, we're going to debit or raise the balance. And when we're over, we're going to go ahead and credit to reduce the balance. Okay? So in order to replenish petty cash, our general journal entry is going to report using our petty cash report. Okay? So, and it's going to be check 11 for our documentation for our source document. But in our general journal, we're going to go ahead and debit miscellaneous expenses, debit advertising expenses, and debit the fact that we are short on our cash by $1. And the total debits then are $35. And then we're going to go ahead and credit cash by $35. Okay, so we've got a miscellaneous expense, which results in a debit, advertising expense, which results in a debit, and the fact that our cash is short results in a debit. And we're going to go ahead and credit cash for $35. Now, when you see these T accounts, that should help you put into perspective what you need to debit and what you need to credit. Okay, so we're looking at those transactions and how everything that's on that petty cash report actually ties out to our general journal entry. Okay, so a general thought about why is it that businesses use a petty cash fund? You want to be thinking through examples for any business where it just might be easier and more time efficient for them to use true cash as opposed to having to write a check for something. And then you also want to think through, why is cash rather than petty cash credited when the petty cash fund is replenished? Why is it that we're posting that to cash rather than petty cash? All right, that is the end. So from here, you want to go ahead and answer the questions on the form online. Make sure that you can do that auditing your understanding piece, and then go ahead, do the work together and on your own. Once you finish, don't forget that you also need to complete the application problems for the chapter. You also need to look at mastery, and you need to look at challenge problems for chapter 5. Do not forget to stop and see me if you have questions or concerns, and hopefully this will all go smoothly as we deal with chapter 5 and cash control systems. Bye.